All right, let's talk about flood insurance. I'm pretty fired up about this, and if you live in Ohio, you should be too. You're familiar that there's little pockets of flood zones all throughout Ohio. If you live in one of them, then you're familiar that the NFIP, the National Flood Insurance Program, has been the only option available to you for decades. Now, the government, they had good intentions whenever this program started. Back in 1968, their whole purpose for starting it was to take away the burden of disasters from taxpayers and reassessing them to the people that live in those areas affected by disasters. So they did this by creating the National Flood Insurance Program. And at first it was voluntary. Unfortunately, they didn't get nearly the participation that they were hoping. So throughout the whole nation, they only had about 95,000 policies. So in 1974, they came to the communities that were often affected by floods, and they said, hey, we started this program and we know that you know about it, and none of your citizens are signing up for it. So here's the deal. If a flood strikes and you are not participating in our program, then we're not going to give you any of the taxpayers' dollars through FEMA. You're going to be responsible for that yourselves. Well, no good community leader wants that for their community. So the government successfully strong-armed all the communities into participating in that flood program, and overnight created themselves a monopoly. So again, good in theory as it started, and between 68 and 94, they handled it just as an insurance company would. They collected the premiums, and then from those premiums, they put them in an account that was separate, and the only thing that happened from that account was losses paid. Well, Congress in 94 said, hey, that's a pretty big account you got over there. I don't think we're going to allow FEMA to use taxpayers' dollars to pay for the NFIP anymore. So you can use that fund to pay for all your salaries and expenses. Well, that's a terrible idea. So not only are these premiums expected to pay out losses of very large storms that affect several homes, but now they also have to pay for the flood maps, all of the zoning software, everything associated with the NFIP. So needless to say, the NFIP does not have any money. Here's an article from the New York Times. I'm going to put it up on the screen. It's called A Broke and Broken Flood Insurance Program. And they have some pictures in here. I'll put the link to it in our video as well. But what I really wanted you all to see was this graph. So the NFIP is completely unable to keep up with floods. So we see here this yellow dotted line tracks with total premiums collected. And the bar graph, the light blue, is the total flood loss claims paid. So here in '05 with Hurricane Katrina, there was over $16 billion worth of damage. But how much premium did they collect? Oh man, only $2 billion. So where does that $14 billion come from? I'll tell you exactly where it comes from: the taxpayers. So as they set out in 68 is to alleviate the burden from the taxpayers, that no longer works, because they just had to borrow all that money to pay for those claims. Well, in 2012, when Hurricane Sandy hit, same thing. And then Hurricane Harvey, Irma, and Maria, we're all familiar with those because those were recent occurrences. Well, the NFIP, whenever they were created, they had very specific guidelines of how much money they had the right to borrow from taxpayers. They've maxed that out. There's no more money in there. So in November of 2017, it was passed, the Bigger Waters policy, and now private market flood insurance companies can participate and provide flood insurance through the non-admitted market. And I can explain that in more depth later. But the good news is, because these private market carriers aren't, they don't have the ability to lean on taxpayers. There aren't any subsidies that they're giving out. They're not the government, so they're actually operating as a real business should. So if they're not profitable, no one makes money, so they make sure that they stay profitable. But the good news for you is that the average savings from private market flood to the NFIP is about $300 to $500 per year. And the even better news about that is that's just on average. Just here recently, we were able to save one of our clients 50% going from the NFIP to private market flood insurance. A FEMA statistic is that during a 30-year mortgage, you have a 26% chance of a flood happening and a flood claim being paid. If that were to be the case, then your premiums would increase. So, if you switched to private market flood and saved $300 annually, and you put that money aside, you never touch it, it's just the account that you let grow. Say you invested that in something that gets, let's be conservative with it, 5% annually. Well, let's look at what that would do. $300 over 30 years, and you additionally put in $300 per year with a 5% rate of return. The total amount that you would contribute is $9,300. That compound interest would be $12,900. At the end of that 30-year mortgage, you would have $22,224. So FEMA says you have a 26% chance of a loss occurring. So you have a 74% chance of this happening. Which do you want to choose? We'd be happy to give you a quote with private market flood insurance so that you're no longer under the reign of the good old monopoly that is the National Flood Insurance Program, an absolutely broken system.